So welcome to the Creative Pride podcast. I'm really excited today and have a tremendous guest. I think you're going to get a lot of value from him and his financial strategies, for one, but an interesting background too that I want him to share, as he now is Dave Wolcott. He is the founder and CEO of Pantheon Investments. He's an author. He wrote the book, The Holistic Wealth Strategy. I love holistic. I think certainly in the financial world, things can be very siloed in nature. So having a holistic sort of approach certainly is aligns to my personal philosophy as well. And you guys own a podcast, The Wealth Strategy Secrets of the Ultra Wealthy, which is, I like that. It has a nice ring to it. So hopefully we'll get to some of that today. But before we get started, Dave, welcome to the podcast. Appreciate you spending some time with us.
Hey, Tom, grateful to be here to connect with you and your audience.
That's wonderful. Yeah, I know we were talking before we got kicked off here. I know a lot of your practice today is centered around entrepreneurs, and we have certainly entrepreneurs on this listening to our podcast, but we also have folks who are maybe thinking about that. So we'll hopefully get into a little bit of that as part of this episode too, of how you can even start thinking about that movement and what that might mean for your finances as you kind of make that shift. But before we get going into any of the nuts and bolts around how you're approaching your finances and how to vote, like how did it all start for you? I know you had an interesting background from the Marines and had 3 new additions to the family. So tell us more about that.
Yeah, sure, Tom. So look, I was raised in Connecticut, where you are today, in a middle-class family. And I was told that the recipe for success was go to school, get good grades, you're going to get a good job, and, life would just kind of work out. So I followed down that path of conventional wisdom and then had the opportunity to do the ROTC program at school and get into the Marine Corps after that. And the Marine Corps was an amazing experience. I got to get tested in combat, get to travel the world, and also, learn some things that they just don't teach you anywhere else, things such as leadership, teamwork, and integrity. After the Marine Corps, I transitioned into the tech industry. And from there, I got really, quickly dismayed, Tom. I had that, sense of mission and sense of purpose, with the Marines. And then getting into corporate America, I just kind of, lost that purpose. It was all about quarterly results and everything. So started to get a little frustrated with that. And then at the same time, my wife and I started building a family. We had an 18-month-old running around, driving us crazy. And then on October 24th, 2000, we actually hit the baby lottery and brought triplets into the world, which is, yes, it was completely mind-blowing, and it still is. So we quadrupled the size of our family. And so the first thing I did was think, how am I going to financially be able to provide for my family? Because I felt so, strong about being able to do that. So I went to see my financial planner, and he just said, look, max out your 401k. You can put money in the 529 plans for the kids, and, you'll be fine. Right. So I think that's when the entrepreneur in me just really kicked in and said, this is not how the top 1% are building their wealth, right? There's got to be a better way to do this. So I became obsessed then on this journey with really trying to figure out how the top 1% are building their wealth, right? And learning about all those different things. So I started investing in alternative assets. Everything from oil and gas to raw lands to multifamily to office, complexes, all kinds of different asset classes. And keep in mind, this is like back in 2000, right? When there weren't, great podcasts and resources available and things like that. So really had to, build up a good, network and look high and low for kind of opportunities. And then I also started a business. I made the transition into a tech consulting business, also built a product company as well. And there I learned a lot about taxes. And, if you've read Kiyosaki's cash flow quadrant, right, this was a transition to becoming a business owner and an investor. So that was a huge shift for me. And so fast forward 20 years later, my book, The Holistic Wealth Strategy, is all about those lessons that I learned over those 20 years. and then really trying to create a framework and a blueprint so that other people can really, build exponential results with their wealth outside of, Wall Street conventional wisdom.
Wow. Yeah, that's a lot to unpack there. And, and obviously you're talking about, accumulation of 20 plus years, right, of you learning, experiencing. So, I know a lot of folks that I speak to or even contemplating some of these things, it could be scary, right, to kind of get started. So like if we reflect back a little bit back in the days and outside finally getting to the sort of realization of your family quadrupling, like what are some of the kind of big first steps that you were doing, just learning, or what did you kind of start with? Because there's a lot in there that you did.
Yeah, Peter Diamandis has a really great saying, right? He talks about trying to find your massive transformational purpose. And there was something about it that, just clicked with me when I started reading books like Kiyosaki and, getting into entrepreneurship, like getting exposure back then. And I think that was really, that magic transformational time for me to just realize that, hey, the world is a big place. I mean, I've traveled to over 40 countries, 6 continents. I've seen a lot of different things. And I always felt that I could do things kind of faster, better, cheaper than others, especially in the corporate environment. So, I really had this, I think deep sense of purpose to try to, do problem solving and really kind of figure out some of these problems. And then as I evolved as an entrepreneur, now it's all about, giving back and helping other people really reach their goals, as like Zig Ziglar talks about, if, once you've helped enough people reach their goals, you're going to reach yours, right? Which is kind of counterintuitive in the corporate.
Yeah, no, and I've certainly have experience in that myself. And it's, to your point, the thing that rang true with me is that everything was maybe about the next quarter, very short term and, very just numbers driven, and you kind of lose sight of why you're doing any of it. Right. And I know one of the core things that you share center around just freedom in our lives, right, in all different facets. Can you talk a little bit about that too? Because I think that's really key to helping shape not just the money piece, but kind of how you operate.
Such a great question, Tom. And, I've done so much real thinking about, like, I've tried to do deep thinking about money, right? And if you think about money, money is really just a medium of exchange, right? Or that we use for different things. It's kind of like oxygen, right? To be able to do things. But we attach different things to it, right? Based on our beliefs, based on, our background, our upbringing. And it's like, okay, if I only had this much more money, it would enable me to do X, Y, or Z. So I really tried to unpack, what that means. And then, Dan Sullivan, the founder of Strategic Coach, who leads one of the best entrepreneurial training programs, he kind of has this framework around the 4 freedoms, which is really understanding, creating freedom of time to be able to do what you want, when you want, to have freedom of purpose, to wake up every day and be fascinated and motivated about, what you're doing, to have freedom of money, right? To be able to, have those kind of experiences, and also freedom of relationship, right? To be able to, pick and choose who you want to spend your time with. So I find that those, real freedoms are really at the core of what wealth really means, right? We might want to have more time to spend more quality time with our family, or we might want to have more purpose in our lives, right? And trying to get that versus the job that we're in because we've had a career along these ways. So,
Right.
so I really like to encourage people to think about the freedoms and what actual money could bring to them, and then how they can create more freedom in their lives.
Wow, that's wonderful. And it's, obviously I have two boys. They're not young anymore. they're at the time of this recording, 17 and 14, but that's what I want from them. I ask them, like, don't ever stop dreaming about things, about how you want your life to be, right? Think about it, right? Really put some thought. And I guess, I'm guilty of this early on myself. Like I was following same as you explained, like, this is the path you're supposed to go on. It's easier because someone's already laid it out for me, right? So I just follow it. Even if I may not believe it or fits who I am or what I want, it's easier. What you're talking about is potentially a little bit harder because you actually have to think about it. You really have to look inside yourself to determine what matters to you, what values you hold, and how you want to show up in this world. And sometimes that's harder.
Yeah, absolutely. It takes courage, right? It takes courage to kind of step out of the comfort zone. Then you've got to really be able to make a commitment if you're going to do something new. But once you can do that, you actually create a new capability and you create new confidence that really supports that.
Yeah, it's amazing. And I can't even imagine as you explain your story of what it was like back 20 plus years ago and where you are today, it's probably light years away in terms of just the way you think about things. So it's sometimes I reflect on myself and you kind of say, wow, it's amazing what you could do if you continue to push forward with things. Obviously with our wealth, that matters, right? Long-term compounding, all that fun stuff. But like reading some of your material, and I know you kind of put this on pen to paper in your book around this 5-phase approach to building your wealth and wealth strategy. And I really like it because I think there's, when I meet people, sometimes they ask me, so where should I invest? That's usually the first question I might get. And then I have to ask them, like, what's the purpose of it? And what's foundationally helping you, what are you trying to build foundationally for yourself and your family and your life? And I think that's where a lot of your 5-phase approach starts, right? Can you talk a little bit about kind of that approach that you help your clients with?
Yeah, sure, Tom. So totally agree with that is that, this approach is all really, encapsulated with creating a vision statement for yourself. Right. We live in such a reactive world and we're running here and running there. But when is the last time you've done some real deep thinking with your spouse, with your family on what it is you're looking to do in this life? Right. Is that creating impact? Is that spending more time with your family? Is that, changing your environment with the people that you want to surround yourself with? Whatever it is, it's different for every, And that's why you can't just recommend, financial products, right? It's not a one size fits all. It should be based on your vision and where you're trying to go. So a great way to kind of think about that, Tom, is, we usually like to ask clients and say, like, if you had $1 billion, what would you be doing? Where would you be? And who would you be with?
Like when you ask most people, kind of what's probably the response you typically get? Do they know?
I think a lot of people haven't really thought about it,
Yeah.
so it requires, deep thinking. And so, I encourage people, you want to be dreamlining, as Tim Ferriss calls it, like when you're in a peak state, let's say after you've had a great workout, maybe you've meditated, maybe you're on vacation with your spouse or something, just taking in, the environment that you're in, and then really try to get clarity on what it is that you want to get out of life, because it goes by so fast. And really, Tom, how many stories have we heard of people who've had a chronic illness, loss of a loved one, or car accident, or something that's really tragic that gets to them to all of a sudden completely alter their vision and what they want to do to take action. So I really encourage people, don't wait for the car accident or the illness to happen. Take control of your life right now and change the course.
No, that's right. And, can easily say tomorrow's going to come, but you and I know, and unless something's changed that's happening in the medical field, we are all eventually going to leave this earth. We just don't know when. Could be tomorrow, hopefully not for a while, but could be tomorrow. So to your point, like don't delay, right? And so for people to listen to this, I'm glad you're at least listening to this to kind of get educated and hopefully take some action with it. So the other aspect of it too, which I thought was great, and I thought was a different approach, and I love your thoughts on it, is, we talk about building our financial IQ. And, obviously that's just one aspect of our lives, but you kind of talk about building other areas of IQ too, right? Building up your strength, your smarts around certain areas. Can you talk through that too and how they fit into building wealth?
Yeah, sure. So here's a great way for listeners to really think about, what really net worth means, like from a holistic perspective, which is your net worth equals your financial IQ plus your mindset IQ plus your physical capital plus your relationship capital. Okay. So when you can think about all of those different dimensions, these are what the billionaires are at the top of their game doing. Okay. What's the difference between Elon Musk and the person you went to high school with, who's in the same town with the same set of friends in the same job? Right. Mindset is absolutely massive. Right. So we always want to start with mindset and have a growth mindset and really, constantly be able to expand and kind of work on that. On the financial IQ side, it's fascinating to me. And I know, you understand this as well, but there's so many different alternative asset investments that you could get into, and life insurance, as you know, right? That can do many things. And most people don't even know of it, right? Because they're typically, being sold, a bill of goods to support someone else's agenda. So being, aware and cognizant of different opportunities and different sectors, I think is really helpful. And we talk about physical IQ again, because this is a holistic type approach. So if you didn't have your health, right, you could have all the wealth in the world, but if you didn't have your health, it would get you nowhere, right? So we want to focus on our health. My goal is to live to 116. Actually just did my biological age test and came back 10 years younger
Nice.
than I am. So yeah, so I'm actually working up, right, on a daily and weekly basis. So that's really important. And then of course, relationship IQ is also critical, right? You're, as Jim Rohn likes to say, you're a product of the 5 people you spend the most amount of your time with. So are those people taking you closer towards your vision statement, or are they actually detracting you from it, right? You want to constantly be up leveling to those, people who are getting you closer aligned to your future self.
It's great. Yeah. And I love the thought around, because I'm too, when I think about wealth, it's not just about, my net worth or how much income's coming in. It's, to your point, do I have good relationships? Do I feel good every day, like health wise? And, and so they're all sort of pieces of the bigger puzzle. And, just like anything else too, I think they have some sort of multiplying effect, right? Synergy to them, right? The more energy I have, and the more I could do, right, on a day-to-day basis. So it's something that I love the way you kind of framed it. So, let me shift gears a little bit, because a lot of we talk about the typical financial advice, and I do believe there's certainly core aspects that are helpful for people getting started. But just like you, I quickly learned where it would have its limit in terms of building wealth. So talk me through some of the maybe foundational pieces of, say, people's financial lives that may not be actually working as well for them as it could, right? And maybe some alternative things that they should be thinking about.
Yeah, there's a couple of myths out there. So, number one is deferring taxes, right? If we keep deferring taxes by putting our money into an IRA, right? I can't read the future, but the one thing I could probably be certain of is taxes are going to be higher in the future than they are today. So by you deferring it, you're likely going to be paying higher taxes. The other thing is you're also typically that money is taxed at your highest income tax bracket, right? In ordinary income. So deferring taxes may not necessarily be the best strategy. I'd rather pay taxes on the seed and not the harvest, right? So that's something that's often misunderstood. And then I think a lot of people don't really talk about the 3 biggest wealth destroyers that are out there. So those are, number 1, taxes. Number 2, stock market losses over time. And number 3, government-sponsored qualified plans. Okay, because in a government-sponsored plan, like in your 401k, you cannot access that money until you're 59 and a half. And then the government's telling you how much you can take out at that time. And you're going to be paying the taxes on that. So, I mean, who's in control? You have
Right.
absolutely no control over that asset. And furthermore, you're exposed to the equities markets that just, to me, it was really like a casino. You wake up in the morning and something happens in Asia that impacts your holdings that just doesn't really make sense. Right. So that's, that's a big loss, right there. And I think that, the financial services industry is typically doing the constituents, not a great job by, talking about future taxes, fees, and inflation.
Yeah.
Because that 7% return that you think you're getting, over the long haul is probably closer to, 2 or 3% once you factor all those things in. And that's why, sadly, we really do have a challenge, in this country in terms of, economic prosperity and retirement.
Yeah. And it's, I hear it enough, and the stress that comes with that too, without having that control. Right. Cause you're kind of, you're hoping it's going to be there and hoping things all work out. And there's a lot of hope involved as opposed to having some level of control and sort of. So in my mind, I think a lot of it's for people who are wanting to take ownership of it. Right. There are alternatives. Right. And for a lot of folks that want to kind of set it and forget it and sort of not look at it, that's what the typical advice helps to. But then, now you're relegated to maybe getting there. Right. Or which I always find fascinating, like, oh, I'm going to be a lower tax bracket in the future. That means you're actually poorer than you are today. Right. In terms of
Planning to be
income.
forward.
Right. Planning to actually have less income. I don't know about you, Dave, but I'd rather shoot for a higher income as I go and use more to start using my money. Like it's just a lot of unique things like that kind of, when you look at it, you kind of shake your head like, that doesn't make a lot of sense. So, for taxes, talk a little about taxes, because I think this is where it really struck me. And I think a lot of people I run across, and just, especially W-2 owners, I recognize maybe they don't have as many options as business owners, but there's a kind of growing idea that there's really nothing you can do about it. It is what it is. There's nothing I can do to reduce it. Even though if you did, it would be hugely impactful to your wealth building long run. But what's your vantage point on taxes, and maybe thoughts on how you might be able to mitigate it other than deferring?
Yeah, so I learned so much about taxes, especially running a business. I fired 5 CPA firms over the years. I kept paying more and more in taxes. I paid more and more in fees, getting more prestigious firms to try to really help us, and still really getting nowhere until I finally realized that, the tax code, 6,000 pages of it, 5,999 pages are basically a roadmap of incentives for business owners and investors, right? So, people need to really make a paradigm shift and understand that if you are a business owner or investor, you can do significantly better and actually partner with the government to do what they want you to do, what they're incentivizing you to do, and get some tax breaks, for that. If you are a W-2 income earner, there's less that you can do. You're being taxed at the highest tax bracket. However, there are some things you can think about. So number one, you could actually create a side business, or maybe your spouse could create a business. We have investors that their spouses have become real estate professionals, and they're managing some of their, rental properties and different investments and everything, right? Which gives you certain tax advantages. People are doing that also with short-term rentals, right? Which give you active income offsets. A lot of people don't realize also, we actually have an oil and gas fund that 100% of your investment is completely tax deductible against your W-2 investment. So you could completely, you could exit some of your 401k and wipe out any of the penalties and taxes, or, significantly reduce some tax brackets by investing in the energy sector. And again, when you kind of make this paradigm shift and understand it, the reason is because the government wants us to support these things, right? Energy supports our national defense. It supports our GDP, no matter what industry you're in. So therefore, they're providing, strong tax incentives to really, incentivize these investors, right, to invest in it. So,
No, that's so key. And it's that took all, you talk about mindset and sort of thinking about differently, like to take that lens of, right, there's the set of incentives that are built into the tax code. You just have to kind of pay attention to them, right? And see where they want. It's just like, that's a big thing for you, like real estate or owning real estate or part of syndications. And can you talk more about that and how that fits into your model?
yeah, it's really the same approach, right? I mean, the government is providing tax incentives in real estate, like say, multifamily housing, apartment housing, and things like that, because we have a massive deficit in this country in apartment housing, affordable housing, lots of different sectors. So therefore, you're able to depreciate. They call it bonus depreciation, where you can actually, offset a lot of your income that comes from that investment. But the same type of approach where you're actually partnering with the government because, they need investors to, capitalize these types of investments.
Yeah, no, it's one of those that I think even more people that I come across, they sort of recognize that, hey, they hear a lot of the wealthy families investing in real estate, don't even know how to get into it. So if you don't want to just own a piece of real estate, like how are some ways that people can get into it without actually going out and purchasing their single family home or big apartment complex? How can they get in?
Well, after the Jobs Act came out, typically, you're right, a lot of these types of, asset classes were reserved for the ultra wealthy and it was hard to get in. But now you can do something which is called a syndication, right? Which is essentially a form of crowdfunding. So you can take a series of, people, accredited investors that can come in and now all of a sudden buy a $50 million property, right, that they couldn't have otherwise gotten into. And you can get into this for a fractional share. So you invest 50K as a minimum investment, and now you have a percentage of ownership into this asset, which is, now you get exposure to a top market, a top quality team of an asset manager, with an acquisition manager who even found the property in the first place. And all you have to do is write your check, start receiving passive income, right? And then they usually, will sell the property in a couple of years and you make gains on top of that. So getting into these syndications can be very lucrative. And also, they come with an asymmetric type of return profile, meaning that they have actually lower risk and higher gain.
Yeah, no, it's it. And for most people, right, and we talked about the 401k earlier, and that's for most people, certainly at their jobs, this is where they're plunking the vast majority of retirement assets, right? And I don't know about you, I'm not a big fan of the word retirement. I think we're meant to be here and do some stuff for a while. But for people who think about retirement and sticking in their 401ks, right, they typically don't have these type of options, right, to even consider. That's the part of the challenge.
Yeah. So what we did, Tom, and I literally went through this process myself about 10 years ago because I became so bullish on, investing in real estate and alternative assets. And I knew that it could, work really well. I was seeing really good results. So what I did is I built myself a calculator and I said like, hey, if I was to, sell, and I'll give you the listeners a real example here because we actually have this calculator that listeners can download. But let's just go with a simple example of taking 100K from your 401k and exiting. Okay. You pay the 10% penalty, pay 35% in taxes. So now you have a net investable 55K. Okay. If you were to invest that into some of these alternative assets and assume a 20% a year, that's compounding tax-free because you're in tax efficient, vehicles, that 55K can grow to over 2 million in 20 years. And had you left your original 100K in the 401k after taxes, fees, and not even including inflation, that 100K is now 200. So when you start to go through the math and then objectively kind of look at this and make your own assumptions, right? And again, this isn't financial advice that we're giving here, just something, based on my own personal experience and then trying to help others, see, objectively quantify the differences between how you can do, based on your own risk tolerance and assumptions. It's pretty staggering.
Yeah. And it's just getting over and looking at the bigger picture of it all, right? Even to obviously know that these opportunities exist. And then to your point, just running some basic numbers to, okay, what is it really like? I mean, nobody wants to pay penalties. The sound of that sounds awful. I get it. However, the bigger picture of it is what I think, Dave, you kind of highlighted. It's like, look at the broader picture of it all and what that can mean long run. And then you have more control and freedom of your wealth, right? Not to sort of relegate it to using that when you turn 59 and a half, right?
100%.
Yeah. So that's a big deal. And I don't know. I don't even know how to put a price tag on that some days to have that control and freedom of my wealth. The last thing I want to cover, and I know this is in there too, that, we think about it, and at the time of this recording, obviously there's a lot of concern in the banking industry and some of the cracks that are being exposed to some of the aspects of it that are putting people at risk that, people never really thought of another way to bank. Right? Where do I store my wealth? How do I get access to financing, which we know can be hugely important to building wealth? But I know you're a proponent of infinite banking, and how did you come across that and throughout the course of your sort of financial journey?
Sure. So I learned about this probably 12 years ago when I was investing in real estate and trying to really amplify my returns in real estate. And so you start building up all this passive income from these different investments, and you need to put the passive income somewhere, right? Before you spend it. So, so the best place to do that is in like, a capital warehouse, right? Where you're putting all your money inside of here. It's now growing completely tax-free, compounding tax-free. And then you can borrow against it, right? To go and invest in that next deal. Or, keep that for your rainy day fund, right? That's the first place that you want to go for 6-12 months. And, everything that's happened in the banking industry. And, I know you're a practitioner as well, and I'm sure your audience is up to speed, but I mean, if nothing really drives home the point more that, the banks themselves are not necessarily as solvent as they should be, if you have your capital in a mutual insurance company that's been around for 150 years, that's gone through many, many, many cycles, right? It is a safer place to store your capital even than banks. And then one of the things that, I learned about the ultra wealthy is that anytime they're deploying $1 of capital, you're not just looking for one return to say, this one return could give me 7%, that one could give me 11, it must be better, right? It's all about actually looking for multipliers. So if I can deploy that $1 of capital, but have it provide me with, safety of principal, tax efficiency, liquidity, control, right? All of these different things, right? I mean, that becomes really powerful because now you can start playing the game at a much higher level. You have so much more control, and, it kind of turns into, instead of you playing linear chess, you're moving into 3-dimensional chess.
No, I love that. And we often talk about it, right, is getting our dollars to do as many jobs as possible, right? Exactly to the way you described it. And that really can help people multiply their wealth way faster than they can ever imagine. It just takes a little bit of open-mindedness to kind of explore, right, how these assets could potentially work together, right? The holistic view. That's why, when I saw that in your book name, it was a perfect match. I said, this is exactly what people need to see and hear and learn about, because they are always, the typical advice will have you going down one lane and it does one thing, and let's just hope it does its job, but it's definitely not going to give you any multiplier effect to that. It's actually going to put you in less control and have one opportunity to win. We want many opportunities to win and pivot when needed, just like we see today, right? So this is wonderful. So Dave, this is great. I think you covered a whole host of topics, from vision to, alternative ways to save and invest, and certainly for folks who are thinking about getting into entrepreneurship, right? This is why you have maybe a side hustle or something. You get started. Start with something, right? You're going to build into it and learn a heck of a lot, and build confidence. So, anything that we haven't covered today that you'd love to share with my listeners, kind of in the last items you want to stress around helping people?
Sure. I think the last thing, I can leave people with is to, really have the mindset that you are your greatest asset. So when you invest in yourself, whether you're investing in your health, your relationships, your education and learning, your time, all of those things, I've always gotten the most exponential return from. So try to have that type of mindset where you're constantly investing in yourself. And that's where you're going to see actually the most exponential.
No, it's great. It's tremendous advice. I think that we can lose sight of that. If we go to school and you think we're done getting educated, well, it's just the starting point. We've got a lifelong journey ahead of us, and hopefully we have fun learning it. So, Dave, really great stuff. Enjoy our conversation. How best for folks to kind of reach out to you to kind of better learn some of the services and offerings that you and your company offer?
Yeah, sure, Tom. So you could just go to our website, pantheoninvest.com/wealth-strategy. And we have links to the book from there. And then we also have a bunch of free resources, like some of those calculators that I mentioned, in different things. And all the proceeds from our book are going to the fund.org that supports our nation's veterans that have been critically wounded. So appreciate, all of the support to go towards our charity there. And happy to connect with anyone and see if we can help accelerate their journey.
Wonderful. Thank you so much. And I can vouch for it. I read the book. Tremendous information there. Highly encourage you go buy it and check out Dave's podcast, Wealth Strategy Secrets of the Ultra Wealthy. Really, I've listened to a number of them. Great stuff. Tremendous guests there too. And, congrats on all your success.
Awesome. Thank you, Tom. Really grateful.
Thanks for joining me on this episode today. I really am grateful for you as listeners to the Perennial Pride podcast. I hope you're getting some tremendous value out of it and hopefully pushing you along your journey to financial freedom. I put this podcast together really to help you get more educated around your finances so that you feel empowered to live the life that you really want. And if you like the content that you heard today or watched, then I would encourage you to go to my website, perennialpride.com. There's tons of other content there. And you can access my book, Wealth Beyond the Numbers. You can buy it there on my website. It's a aggregation of a lot of great tips and tools I've learned to not only build my wealth in my accounts, but build wealth in my life and abundance and joy, and something that has a lot of my experiences in the journey that I've been on personally. Hopefully that can be also of value to you as you sort of move forward. So thanks again for being a Perennial Pride listener, and we'll see you on the next episode.